Hello everyone. Recently in January 2022, the Ministry of Finance has announced the introduction of corporate income tax in the UAE, which will be effective from financial years commencing on or after 1st June 2023. That means if your business has a financial year starting on 1st July 2023 and ending on 30th June 2024, your business will be subject to corporate tax from 1st July 2023. However, if your business financial year or calendar year are same, that is starting from 1st January 2023 and ending on 31st December 2023, your business will be subject to corporate tax from 1st January 2024. Corporate tax is a form of direct tax levied on the net income or profit of a corporation and other businesses. However, taxable income will be the accounting net profit income of a business after making adjustment for certain items to be specified under the UAE corporate tax law, which will be seen in mid of 2022. The accounting net profit income of a business is the amount of reported in the financial statements prepared in accordance with internationally accepted accounting standards. UAE has announced a three-tier rate structure. That is, if your taxable income is up to 375,000, it will be nil tax. If your taxable income is above 375,000, it will be taxed at 9%. There will be a different tax rate for large multinationals that meet specific criteria set with the reference to two pillars of the OECD base erosion. A multinational is defined as a corporation that operates in its home country as well as in other countries through a foreign subsidiary, branch, or other form of presence or registration. Multinational corporation that has a consolidated global revenue in excess of euro 750 million, that is equivalent to AED 3.15 billion. Now, UAE corporate tax is the lowest in the GCC as Bahrain has not implemented any corporate tax. Qatar has implemented 10%. Oman and Kuwait has a 15% on profits, whereas Saudi Arabia has 20% of net adjusted profits. So, who are in the purview of corporate income tax in UAE? UAE is the federal tax and will therefore apply across all emirates, and it will apply to businesses, individual, free zones, and foreign companies. Coming to businesses, all activities undertaken by the legal entity will be deemed business activities and hence be within the scope of UAE corporate tax. It will apply to all businesses and commercial activities alike except for the extraction of natural resources, which will remain subject to emirate level corporation taxation. Coming to individuals who has commercial license and businesses income earned under a commercial license will be within the scope of UAE corporate tax. It includes sole proprietor and freelancers. But note that an individual personal exertion income, that is salary, along with dividend, capital gain, investment in real estate, and bank interest derived in a personal capacity should not be subject to UAE corporate tax. Same goes for the free zone. What free zone businesses will be subject to UAE corporate tax, but the UAE corporate tax regime will continue to honor the incentive currently being offered to free zone companies that comply with all regulatory requirements and do not conduct business with mainland in UAE. That means that if the free zone businesses conduct business with mainland, then they will be subject to corporate tax. A business established in a free zone will be required to register and file a corporate tax return. The UAE corporate tax treatment that will apply to businesses in free zone will be same across all free zones. There will be no difference between financial and non-financial free zones. Further details had to be seen when the law comes. Regarding foreign entities and individuals will be subject to corporate tax only if they conduct a trade or business in the UAE in an ongoing or regular manner. UAE corporate tax will generally not be levied on a foreign investor's income from dividend, capital gain, interest, royalties, and other investment returns. Foreign corporate tax paid on UAE taxable income will be allowed a tax credit against the UAE tax corporate tax liability. UAE businesses will need to comply with transfer pricing rules and documentation requirements set with reference to OECD transfer pricing guidelines. Now, regarding the tax group as provided for the UAE VAT regime, a UAE group of companies can elect to form a tax group and be treated as a single taxable person provided certain conditions are met. A UAE tax group will be required to file only a single tax return for the entire group, and tax losses from one intra-group company may be used to offset taxable income of another intra-group company provided certain conditions are met. There are certain exemptions from income, that is dividend and capital gains, qualifying intra-group transaction, corporate reorganization. Dividends and capital gains earned by UAE business from its qualifying shareholder will be exempt from UAE corporate tax. A qualifying shareholder refers to an ownership interest in a UAE or foreign company that meets certain criteria that has to be specified under UAE corporate tax law. And qualifying intergroup transaction and corporate reorganization will also be not subject to UAE corporate tax, provided the necessary conditions are met, which has to be seen when the law comes. Regarding the withholding tax, there is a incentive that UAE withholding tax will not be applicable on domestic and cross-border payments of any nature under the UAE corporate tax regime. Regarding their administration, Federal Tax Authority will be responsible for the administration, collection, and reinforcement of UAE corporate tax. However, the Ministry of Finance will remain the competent authority for purpose of bilateral, multilateral agreements and the international exchange of information for tax purposes. Now, all businesses, including free zone companies, are required to register and file CT return electronically on a yearly basis, and non-compliance will be subject to penalties. But more information on registration process and ongoing compliance obligation for businesses will be provided once the law comes in. So what is the way forward? FTA has published the FAQs on corporate tax on their website. Further guidance on the corporate tax regime is expected by mid-2020 from the FTA, giving UAE business ample time to prepare for the introduction of the UAE. Meanwhile, it is recommended that the businesses should set the ground ready for UAE corporate tax implementation, and they should analyze corporate tax requirement applicable to their business activities carried out, understand what is expected to be taxable and exempted, check for adequate bookkeeping, as each legal entity would be required to report taxable income separately unless included in a tax group. Check whether your business maintains an accounting record following internationally accepted accounting standards, as the revenue subject to corporate tax is the accounting net profit as per financial statements after adjustment to be specified in the UAE corporate tax law. So that's all for now, up to date. So stay tuned. We will be updating you if there any progress or any update from the FTA. Thank you very much.